Welcome to Explain the Charts, where we break down the news and charts to help you make informed trading decisions. Today, we're focusing on Intel Corporation, and we'll be diving into the recent headlines and their potential impact on the stock's price action. Let's start with the news. Recent headlines paint a mixed picture for Intel. On the one hand, the company is poised to finalize an $8.5 billion government funding agreement, a move that could bolster its financial standing. However, concerns remain regarding potential divestment rumors. Adding to the uncertainty, regulatory hurdles have reduced the likelihood of a Qualcomm takeover, though Wells Fargo highlights a potential equity investment from Apollo. Analysts are divided on Intel's prospects, with Bernstein lowering its price target to $25 from $35 due to challenged Q2 results and a weak Q3 outlook. Despite these challenges, Intel continues to navigate a rapidly evolving technological landscape, unveiling next-generation AI solutions. Investors are closely watching Intel's upcoming earnings report, which is expected to show a loss of 3 cents per share and a significant year-over-year revenue decline. This news creates a complex backdrop for Intel, leaving investors to grapple with conflicting signals. Now, let's turn our attention to the charts and see what they reveal. Taking a look at the daily chart for Intel, we see a clear downtrend in price over the past month. The stock has been steadily declining from a high of around $36, reaching a recent low of $22.39. This downtrend is evident in the consistent series of lower highs and lower lows. The recent price action suggests that the bears are currently in control. We can identify a significant resistance level at $35, where the stock has repeatedly stalled in its attempts to rally. This resistance level is reinforced by the fact that Intel has faced significant headwinds, including manufacturing delays, regulatory scrutiny, and competition from other semiconductor companies. Looking at the daily chart, we see a significant support level around $20, where the stock found a floor in the past. This support level has historically marked the bottom of the recent downtrend. If the stock were to break below this level, it would be a bearish signal. However, if the stock can manage to hold above this level, it could be a sign that the bears are losing momentum and a potential rebound may be in the making. Let's shift our focus to the 1-hour chart and zoom in on recent price action. The 1-hour chart reveals a more volatile price movement, but it generally confirms the bearish sentiment seen on the daily chart. We can see a significant resistance level around $23, where the stock has repeatedly struggled to break through. This resistance level is reinforced by the recent negative news headlines and the overall bearish market sentiment. Looking closer, we notice that the stock has bounced off the $22 level several times in recent days. This suggests that there is a potential support level at this price. If the stock were to break below this level, it would be a bearish signal. However, if the stock can hold above this level, it could indicate that the bears are losing steam and a short-term rally may be in the offing. Let's look at the 15-minute chart to see if we can pinpoint any potential catalysts for a short-term reversal. The 15-minute chart shows us the most granular view of INTC's recent price action. We can see a lot of volatility in the short term, which makes it difficult to pinpoint a clear trend. However, we notice that the stock has been trading in a narrow range between $22.50 and $23 over the past few days. This suggests that the market is currently indecisive and there is a potential for a breakout in either direction. The key factor to watch for is whether the stock can break out of this range. A break above the $23 level would be a bullish signal, indicating that the bulls are gaining control. On the other hand, a break below the $22.50 level would be a bearish signal, suggesting that the bears are still in control. Let's bring back the daily chart to recap the key price levels and potential scenarios for Intel. In conclusion, Intel faces a complex situation, with mixed news headlines and bearish trends evident on the charts. The daily chart shows a clear downtrend, with a significant resistance level at $35 and a support level around $20. The 1-hour chart reinforces this bearish sentiment, highlighting resistance around $23 and potential support at $22. The 15-minute chart reveals a short-term range between $22.50 and $23, which could be a potential breakout point. If the stock breaks above $23, it could be a bullish signal, suggesting a short-term rally. However, a break below $22.50 would be a bearish signal, suggesting that the bears are still in control. For the long term, the key level to watch for is the $20 support level. A break below this level would be a bearish signal, indicating a potential continuation of the downtrend. Conversely, a sustained rally above $35 would be a bullish signal, suggesting a potential reversal of the current trend. Keep an eye on the upcoming earnings report and any news related to the government funding agreement and potential investment. These developments could have a significant impact on the stock's price action. Additionally, pay close attention to the key price levels we've discussed. A break above or below these levels could provide valuable insights into the future direction of Intel.